Good morning, NIO fam. It is Laser here with another weekend video analysis. It's 9:14 a.m. in the morning. And for those of you who forgot to reset your clock back an hour, it's probably still showing 10:14. We saved an hour, daylight savings. I think it's daylight savings. It's not for some people on parts of the world, but I know for most people, the hour went back. It's been a week. It's been a hot minute. This past Friday was Halloween. Happy Halloween to all of you guys. I hope you guys all had a wonderful Halloween. I was sick, and my poor 6-year-old missed Halloween. He was covered up in a blanket, and he ended up puking that night, and he ended up just with like a super high fever, and he's still sick. He had a fever again last night. And he's still trying to recover. I also was shivering, got super sick on Halloween. I'm recovering faster than my son, so I guess that's a good thing. I'm feeling almost 100% better. I managed to step out, go for my morning walk. I feel so much better. Now, I have recorded this like analysis. I did my analysis. I've already looked at all the numbers. I looked at all the charts, so I kind of already know it on the back of my head. I did this like twice yesterday. And the reason I did it twice is the first time the audio got messed up. And I'm like, must be some sort of like glitch. I must have did something wrong. I did it a second time. Same issue. And I was like, I don't have time to do this again. So I just put it to rest and spent time with my family. So I'm hoping this video will work, and we're gonna get this video out. It's gonna be a good one as always. You're gonna want to stay tuned. If you're brand new here, we drop one of these videos once per week. We normally try and get it out on a Saturday, but like I mentioned, I was sick and there was technical difficulties, so it's coming out on a Sunday. But it will be before the market opens up, and it's gonna give you just a little a peek into my eyes as to what I'm seeing for NIO. And there's some good things, and there's not some super good things, and I'll share both things. And I'm trying to think where the best way I'm going to start. So I'm going to try and cut to the chase as to what I see NIO doing next week and the following weeks. Here's a hint. It doesn't change much from my view from last week. There's some changes based off what I'm seeing so far, but not much. Just to recap, what did I say last week? Last week, I said that there would be a dead cat bounce into the golden pocket, retrace, and then it potentially stalling out there, building a lower high, and then giving you your last dip. I still think that. You'll notice that this most recent week, we almost tagged that golden pocket. I think it was like, what was the price? The high was 733. We almost tagged that. Now, I still think that's still in the process, but I also am seeing supporting signs for it wanting to push higher than 733. And I'm actually going to go ahead and call it out for next week that you're going to see 759, 760, which is the 0.786. And the only reason I'm leaning now towards that is I do see some more momentum on the shorter time frames that are saying and suggesting we could see higher. However, I'm still not seeing what I want to see on the larger time frames, which is what we're on right now, the 24-hour time frame. And what do I want to see? I want to see this velocity break. If you pay attention to my velocity indicator right down here, I want to see this indicator break, which is going to show us that our velocity downtrend has broken. You can see now it's broken down. Actually, you can't see it yet, but let me draw it out for you. You can see it's broken down below this orange trend line that I've drawn out. It's also broken down out of this trend line here, which was the original. And it's curling up and giving you your very first retest bounce that you often see when a run is done. It's basically your lower high that comes in before it pushes lower. So I do think we could see potentially 759 just because of the smaller time frames. I'm seeing it as being a possibility here. But I don't like what I see yet. Particularly, this is a lower low in reference to this low. particularly that we are now below the 200-day moving average, which is traditionally when you start seeing larger corrections take place. It's not the best place to be on the larger time frames, but we still remain above the midline, which is really, really healthy. What I think is going to be forming here is eventually we get another cross and it'll make another higher low. But it's going to take time, I believe. We go down to the 12 hours. We're still below the 200-day moving average, which means the trend is still kind of bearish on a still larger time frame. We have not gotten a break on either this time frame or this, but it's getting closer. It seems more like in like this tight consolidation range. And my gut tells me, and I'll explain why, that we might be setting up after another little push higher, possibly to kind of get, maybe just have your guards up, that we could see one more leg lower. And let me just clarify, my goal is not to scare you guys. I don't want to scare anyone. That's not my intention. I'm just sharing my opinion. If you disagree with me, you're allowed to disagree with me. And I'm going to say it right here, right now, I could be wrong. I'm just giving you my opinion. I'm just sharing what I say. It's a neutral take. It's not a, this is what it's going to be take. Don't take what I say and think it's going to happen, like guaranteed. And those of you who've watched me for a very, very long time know that I've gotten it wrong on both this pullback and this pullback, where I was like, yep, one more pullback. I was calling for one more pullback. And I got it wrong on both times. So don't, this could be one of those times where I'm getting it wrong. All right. So, but I'm still going to lean with the heavy bias and let y'all know, I don't think the bottom is in. I think the lows are going to get taken out at 623, and we could see one big swift like drop that takes place on NIO. I do see that potentially happening. And that's part of my thesis, that it's going to play out the Robin Hood go crazy fractal. So if we were to quickly dive in real quick to Robin Hood, and I talked about this in my previous videos, but I want to just kind of bring to your guys' perspective here. When Robin Hood made this really nice move in December 2023, it completed a cup. So as you can see here, that was your completed cup. And then it completed a handle here. And that handle, by the way, came down to the 0.5 on the Fibonacci, the 50% of that of the whole move from up to down. 50% of that move, it came back to retrace, and it gave you a little bit of that accumulation range. Now, pay close attention. Before it reached the 50%, it gave you a lower high bounce as well. So you got that little bit of that lower high, kind of thinking like, oh, there might be more, and it dropped even lower. And in fact, you'll notice I took the pattern from this bar right here, and we're going to copy that. We're going to go back to NIO, and I'm going to show you what that looks like on NIO. So if I go, I'm going to delete this drawing. I'm going to paste it. This gray thing that I just pasted, this is the exact bar pattern from the top of the cup for Robin Hood, where it came down and gave you a retrace of 50%, and then it went crazy. So if I were to line this up, and I'm going to try and do the best I can to line this up, actually. Something along the lines of this type of pattern. Now, I can manipulate it further so it shows that it goes, you get like a much bigger bounce. You can manipulate it so it kind of comes lower or higher just by shrinking. I'm just trying to give you a general idea. The idea here is that I do anticipate that we are forming this lower high that is forming. I still see it kind of rising next week, and it hasn't quite reached that top end range. But I think once we reach that top end range, we're going to come back down and we're going to swoop and make that lower end range. Now, it's funny. Right over here, it's $5.11. You want to know what's crazy where that level is? Let's just show you. I'm going to show you something. So if I draw, let's just make sure I'm doing this right. If I draw Fibonacci from the bottom to the top, that takes us right around to the 50% Fibonacci, around 553. That would be the equivalent of Robinhood. And essentially what you'd be getting as the following move would be this. Now, if you're, and I've seen some people post these charts on Twitter, and they're calling for 550, and I know there are others that are, criticizing it, saying like you're a bear or you're short. If you're going to be realistic or you're going to be neutral, which is what I do, that's not being bearish. That's just being realistic and just sharing what you see. I think it's important, and this is just it needs to be said, not to attack someone with a different view. If you have a bullish view and you disagree with someone, take what someone says that goes against with what you said with a grain of salt. Don't attack that person. You should be thankful someone's giving a different perspective so that you can get out of your bubble. You don't want to be in this circle of this echo chamber of everyone saying the same thing. You're going to get blindsided when things don't go your way. And that's where you're not going to be able to manage your emotions. That's where you're going to make kind of like not only a silly decision, but you're going to feel sick inside. You're going to get that deep, sick feeling in the pit of your stomach because you were wrong. You got to entertain different scenarios here. And I know people tend, especially with all stocks, not just NIO, with all stocks, people get very, very, very defensive once you kind of share a thesis that goes against your own thesis. Please, you should be thankful for different perspectives. If you don't got nothing nice to say back to that person, let them have their own thoughts. It's the same thing for me as well. If you disagree with me, I'm happy. If you disagree with me, I want you guys to think for yourself. As always, you guys are supposed to do your own due diligence, your own research, and come up with your own decisions if you're making a big financial decision. I'm just here sharing my opinion, as are other people. Having said all that, so we have 50% of this move. Actually, I don't even think I did that right. Why is it even going up to 921? I did that so wrong. It should have only gone to 803. There's your 50%. So technically, if it got a Robinhood fractal, it would go to $5, and you would tag it briefly, and then it would like hover around 570, potentially 550. Now, I'm going to erase some things. I'm going to show you some more confluence that supports my idea that we will see a bigger drop. Okay, the idea is if this was a single leg, if this is a tool called the trend-based fib extension, where I can measure the move down. So this move from $8.03 comes all the way down. What was the low? It was $6.20. I'm trying to get it right down to the penny. I'll adjust it. And if it goes up, let's just say it goes up to, what did I say? 759. I have to use my arrow keys to get that 759. Let's get this to 620, 759. How do I do that? I have to zoom this in to really get it. I'm trying to get precise here, guys, because I am calling for, I believe, 759, which is this 0.78. And I'll tell you why I think it's going to go higher next week, but I'll also share why I think it can go lower. You'll notice this move from the top to the bottom, if this bounces to the 0.78 that I talked about, which was 759, if it gave an equal move down, 100% of that move would be 578. And you could potentially see a little bit of an extension move down to 528, or slightly it'll tap that 519 level, which from a perspective, that's only a 50% pullback. It's not major at all. How much has NIO pulled back? Do you guys know how much NIO has pulled back? Let's look. NIO has given you a bounce on the 0.2386, 23%. Like that's the very first fib trend line that it's bounced off of. Not a very big retracement. You could see the next big two levels, 575, 518. You got to want to, there's confluence that would support that. Now, if you want, I'll show you a little bit more confluence. Here's some more confluence that you may want to prepare yourself for potentially one leg lower. And I say this not to change your mind and not to scare you. Please don't get scared. You shouldn't be scared. If I'm showing you a chart that's doing this in the long run going up, you should be happy, not be scared. But and this is really just meant to emotionally prepare you for what to expect, not to be like, oh yeah, you should sell here, buy here. That's not what I'm saying. I'm just saying emotionally prepare yourself for the potential for a move lower. No, understand what I'm saying and why I'm saying it. Don't get it wrong. We have a break below. The velocity has broken down below, which technically, I mean, you could the comparable move is this. But if I were not even using this and I was being fair and say, okay, what about this? Okay, so it's already broken on the log scale. On the regular scale, it has not broken. We've not broken yet on the regular scale, but the velocity has. And oftentimes what you see when the velocity breaks like a trend line, not all the time, but often, what that means is the supporting trend line that was supporting this rally, it's come down so fast that it's already broken out ahead on the velocity. And that means the next move will happen below this trend line. Where? So here's more confluence into $5.50. Prepare to be amazed, okay? If I go and draw this parallel channel now, we'll draw it like right there. So what I did there is, if you want to know what I just did, I took the bottom of this candle, I lined it up, and I didn't really do a great job. Did I do it right? Let's see, we're still on log. Sorry. That's more like it. Okay. So what I did there is I took the bottom of these two candles and I measured it to the top of this candle. Now, if you take a look here, if what I do is I copy it, I literally hit copy and paste it. So I can, it's the exact same like length. So I not only can I stack it above if it were to break above, and you can see it's tried to break above. I mean, if it did break above 803, we would have been looking at like 10. But if we are to assume it breaks below, this is going to help us identify the targets. Now notice how I'm stacking this below. This is using Fibonacci. This midline, by the way, is your 50% of a channel. 50% is a major Fibonacci trend line, but now I'm drawing it on a parallel channel. It's in half. Now notice, if this breaks below, and oftentimes when you get a break below, if it did, let's just say it rises 759, and then you get the next leg lower, your next form of support might come at that midline, which is 570, or you'll notice, and if it's not going to drop that fast, but you could find these numbers on here. You could see there's like 550 on here. If I were to draw that right around December 23rd, 550. Now there's a reason I'm going all the way to December 24th as well. And if you watch my last video, you would know, but if you don't remember, or you didn't watch my last video, I'm going to remind you why I'm actually drawing that out on December 23rd around 550 for the confluence. And the reason for that is if we measure the date range from the start of this rally to the top of the rally, we get 86 days or 61 bars to be exact. And if I were to take this, which this, no matter where I move it, it stays at 61 bars. I move that to the top now to the bottom. The thesis and theory is if it goes up for 61 bars, you got to give it time, 61 bars at least to get to the bottom. I do believe that actually plays a role. And also that 90 days, some of you may have never heard this theory, but it's totally true. I'm not going to take the time today because it'll make the video too long. But if you look at every single downtrend on NIO since the start of the IPO, every single downtrend has taken at most 3 months. Sorry, at minimum 3 months. And it's funny that it's 89 days, which is roughly 3 months. You could say like that could be where. So this takes us to what date? December 30th. And perhaps, and I'm not saying, but perhaps we could see these levels by the end of December. And then you would get that final eventual rally that would take months and months and months, and it would take us to our higher high, which would be another 100% basically rally. Delete this. And here's another date. I shared this in my last week. If I took half that bar, which is 30, about 30, and I'm going to go with 31 because it lands on a Friday, November the 14th. And I'm going to draw a little dot here. That's 2 weeks from now. Where does that take us? Takes us right to 783. It's still a lower high. Potentially, maybe this thing climbs, maybe it drops. And then I think what you're going to get is something along the lines of this. That's what I think is going to happen. Now, the chart looks quite messy, so let's clean this up. Let's clean this up, shall we? I delete this, delete that. We don't need this. We don't need that. I want to keep the white line. I don't need this. We don't even need that. Look how clean the chart looks now. If this ends up being our actual lower high, what do we end up getting here? This is essentially a larger bull flag that ends up forming. And you can support that bigger move down. It could happen. It's a possibility. I think that is something that's going to end up potentially playing out for NIO. On both a timing perspective and a price perspective, I'm seeing some confluence that it could do this. Now, remember, if you look just at NIO, it's just one piece of the puzzle pie. And again, I feel like it needs to be said because I know people can get defensive when you suggest the price can go down. And I'm going to just try and disarm some of the people that might be getting defensive. If you're a long-term holder and you don't care about the volatility and you're going to hold for a long term, it's in your retirement savings plan, and this thing's going to be like, it's there for long term, you shouldn't worry about these short-term moves. The nice thing about understanding or trying to figure out what these short-term price moves, it can help you manage your emotions. Sometimes when you see the stock go down, that could make you feel really bad. It could stress you out. It could ruin your day, and you're wondering why the hell is it doing that? Sometimes it's just technicals that are just playing itself out, actually. Sometimes. I don't want to say, I don't want to say for a fact that this is going to happen. I could be wrong. And it must be said. And I'm saying this because I know there's some people who will say, no. I've seen the charts as well. Some people are suggesting, and they could be right. I don't want to call them wrong because, hey, maybe they're right and I'm wrong. They are saying this cup, which we all see, and they're calling the handle complete. Perhaps they're right. Perhaps. For me to see that, I would like to see our velocity on the 24 hours first break. Hasn't done that yet. On the bigger time frames, it hasn't done. Now, on the shorter time frames, the reason why I think it could potentially push higher, as high, I think, as I don't know why I put it to 780. There was something about 780. I think it was the way I drew my parallel channels. But if you look at the 4 hours, on the 4 hour time frame, something very good and there's good and bad. The good thing is we're now above the midline. And our 200-day moving average is curling up. The bad thing is the 200-day moving average has now broken below the midline. That's the first time it's broken below since this entire rally. And it's also made a lower low. So this is more like a counter trend rally. So that's a bad thing. But the good thing is now that the velocity is broken up, it's telling me it wants to make a bigger bounce up. I go to the 2 hours. 2 hours is already bouncing above. And our velocity is above the midline. Notice that. And even on the 1 hour, it looks great. Notice how it's just been consolidating and trying to get above. And you notice that with the price, it's rising, it's rising, it's rising. So I do believe there's room for that bigger move that's going to be for later this week, where I could see 760, maybe we see 780. Personally, I'm going to be very, very, very doubtful. I'm going to have my detective hat on, and I'm not going to be convinced very easily if I see a bounce next week. And I think that's going to be part of finishing off this dead cat bounce. And I have more confluence to believe this. And again, you can believe this if you want. I'm not gonna this is just my opinion. Now, normally I would like to do BABA, Baidu, KWeb, JD, but I'm gonna jump into DXY for now, which is the US dollar. I made a tweet earlier this week. If you're not already following me on Twitter, please do. It's very, very important. Pay attention to the US dollar, which, right, by the way, is 99.716, just shy of 100. Now, I want to bring your attention to our velocity, which is broken above the midline. The 200-day moving average is broken above the midline. Why is that important? The last time the 200-day moving average was above the midline was March 18th, and the last time it was trending above the midline was November. And you saw continuous higher highs and higher lows. What happened prior? When we were under this midline, every single bounce was just a dead cat bounce. Dead cat bounce, dead cat bounce. I mean, this was getting close because it kind of almost broke above. But these bounces were all dead cat bounces, and it saw lower. And this was our bottom right here. Now, if you pay attention to what's actually happening now to our US dollar, we're getting higher highs and higher lows that are forming. This is the higher high. And that is a common trend that we end up seeing. Once you start breaking this trend, it's starting to build off a bullish momentum. Why is this so important to support my thesis that the bottom is not in on NIO? Let me tell you. I'm going to use a vertical line tool to draw this out. The last time we had a break above, I mean, the velocity technically broke above here, but you can say here, or you can say even here. Let's just say here, because it looks like that's when the US dollar started going crazy. Let's pull up the NIO chart. Take a guess. Take a guess real quick what this NIO chart is going to look like from this stretch when the US dollar went up. I want to give you that shock factor before I do that. So here it is. Get ready. So I know what some of you guys are saying. Well, that's a different time. NIO fundamentals were not as good. The Chinese market was not as good. There's so many different excuses, okay? Regardless, US dollar, when it rises, what you need to understand, when a US dollar rises, that rises during a time where the market likes to do what they call it risk off. And what that means is money likes to come out of the markets and flee to safety. US dollar is usually the safe asset that money tends to flow in because it's the most liquid and it's a safe asset. And if US dollar is going up, if you're sitting in cash, a cash position, it would go up. If you were sitting in a cash position right down here at 100, and all you did is held cash, completely liquid, you would have potentially gained 10%. Meanwhile, in that same time, if you held NIO, you would have lost where it went from $7.20, whatever the number is, $7.25, all the way down to, you would have lost a lot in that same period of time. Now, it's not all dark and gloom. I don't show you this to fear porn. Again, I say this again because it needs to be said. I know some people get freaked out about this. So let me tell you the good about this, because it's important to look at the good as well. I'm going to do the same chart, but I'm going to show the Hang Seng Index. Hang Seng Index is our Chinese, and it's basically the equivalent of the SPY, but for the China. Notice how Hang Seng also pulled back, but it did something different. It made a higher low, higher high, higher low, higher high. So even if you do get a correction, that overall trend is going to be higher. Even if the dollar decides to go higher, the bigger and longer time frame is you're going longer and bigger up. But it's important. We don't talk about just long-term price action. We talk about short-term price action, and I do see those risks. And what I see now is I see a case for a rising US dollar. I think there's this 100 is going to be a big psychological level. Once it gets over that 100 level, there's going to be a lot more questions and I think fear in the market, it could accelerate us to that next potential drop. I don't see the lows being taken out at 98. I see higher highs and higher lows being holding, at least for some time. And if the theory is true on downtrends, by the way, like if this thing went on a 260-day downtrend, do you know what I mean? Not to say it's going to be like this excessive long US dollar rally, but you got to be paying attention to it, okay? And the reason I jumped to the Dixie is to say, well, what's going to cause NIO to drop? We have record numbers and this, all these great things. I get it. I know it. And I'm a bull. I'm a NIO bull. I'm not going to mock you guys. I believe you have a full case and argument for NIO being way higher, and it needs to be. But sometimes the markets, NIO will have to move with the markets. It's just, I believe that's just what's going to happen. That's my thesis. I'm pretty strongly biased towards that. Now, when I go to BABA, Baidu, KWeb, JD, do they tell the same story? Well, and then we'll look at the Hang Seng Index, and then we can wrap up our video just to kind of really tell you here. By the way, before we look at BABA, how high did it go? I'm going to get rid of the scribble, by the way. It just got up to 734, almost just shy of that golden pocket. I'm not even doing it neatly. It tagged the 0.618. The golden pocket is 739, and the 71. I don't even know if I'm doing this right. Like around this level, 763, 739. It tagged almost the golden pocket. Let's go to BABA. Now, I had these drawings from last week. If you don't believe me, watch my last week's video. I talked about like that bounce coming into the golden pocket. Where did BABA bounce to? From top to bottom, it bounced into, you see this nice little gold line here? 178. I mean, it overshot it, 182, but it came right back down. So almost like it bounced below and off that. And I am noticing that on BABA, it did break this trend line, and it's now kind of almost rolling over is what I like to say. When I see the velocity tend to do this, where it hangs out below the 200-day moving average, like just below, that's like where it's rolling over, it's consolidating and giving you the lower high before it breaks lower. It's kind of like, as you imagine, I'm going to give you another example. It's like rolling over, and then it gives you another like lower. I've seen it. I could see the case where you get a bigger correction that takes place on BABA. Now, if I get rid of this mess and on these lines, we have this parallel channel that supports the bottom of that channel. I mean, it's 135, but I mean, you could see 140s, maybe, just maybe. Baidu. How high did Baidu bounce? Baidu didn't bounce as high. Baidu only bounced to the 0.382. But I want to point out, if you're a Baidu bull, that it made this rare setup that is also on NIO. This rare setup being that the velocity made a lower high, the price made a higher high. And while that is short-term bearish, as buyers are getting exhausted and it's saying there's going to be correction, when you get that break, it creates this resistance trend line almost like a magnet. Typically, when buyers are getting exhausted and they take a break and it cools off, what that usually means is it's going to go higher once it's done. So that made a lot of good signs. It made this beautiful trend line. I can see 190, 200, 205 taken. Like, you're going to see some big numbers for Baidu. I'm very, very bullish on Baidu, but we could see a little bit lower first, just like I see on everything. KWeb. How high did KWeb bounce? KWeb bounced to just around the golden pocket, a little bit above that. And what did KWeb do? It's doing the same thing. It's broken below the 200-day moving average, and it's kind of giving you that bounce, consolidation. And we even saw it here a little bit, where it gave you a bounce, it's consolidating, and boop, you got one last leg, like final lower before they launch this thing. So I believe it can happen here. I'm seeing that, even though I still love KWeb. I think KWeb is bound to take out the highs at like 80. But on this correction, I don't think that bottom at 737 is quite there yet. I think it'll see lower, which is beautiful. I do not think it'll take the lows out at 34. I think it'll go above that. It's going to create higher highs and higher lows. And the reason it'll create higher highs and higher lows is not only is it above the 24 hours, but it's above on the weekly, and it looks beautiful. The lows will be held, by the way, at 27 on the weekly. And you can make an argument for 34 because we're also above. But JD also gave you a rough bounce into the golden pocket. Guess where the Hang Seng Index bounced to as well? The Hang Seng Index gave you a bounce to the golden pocket. And while these bounces may seem like it's, oh my God, it's my stock because of the good news and because of the deliveries and because of the news and because of, just realize you're moving in sync with all of China. You're moving in sync with the global markets. You're moving in sync with everything. And so there's an element of not being able to beat the market. There's an element of it's going to correlate to whatever the whole Chinese sector and Chinese market's going to do. And that is something that's going to, play out here. And now you notice it broke below and it's giving you a bounce. And I do believe that's a counter trend bounce. And I think it's going to potentially, you might see that push higher. I can see it pushing higher this week into retesting this trend up to 26.5. So another 500 points before it decides to give you that last leg lower into 2,500. I believe that's gonna be the case. I'm leaning slightly bearish, but that doesn't change my view from last week. You guys knew that about last week. I'm just confirming that. And then again, you got the US dollar. We go to the US dollar. Again, I can't get around the fact that this thing was, and if you guys remember the weekly, and it's actually quite bearish on the weekly. Whatever bounce we get on this is like a dead cat bounce. It's almost like a pump and dump that's actually happening. And you can see all of these bounces. None of them have been sustainable because they were all below the weekly midline. And this bounce is also below the weekly midline. But I talked about this maybe in like 5 videos ago. The last time the DXY, like pretty much if you look at the velocity, the last time our US dollar, DXY, which is US dollar, was this oversold on the weekly, you can see the responding moves each and every single time. Okay, this was the most recent time. It went from 890 up to 115. Then there was this time we went from, was it 90? 890 up to 103. Down here went from 74. I can't believe it was 74. That's insane. Up to 84. So it's very, very low. So there's going to be, I believe, a dead cat bounce that is forming just based off this metric alone. I think it's like just it's so badly oversold. It dropped from 110 down to 96 super fast. And so it's bound to rebound. So on the 24 hours, on a shorter time frame, I do believe that this thing is going to be making higher highs and higher lows, and this does support my thesis that there could be a bigger correction that's coming on the market. I don't want you guys to be scared because I do believe whatever bounce you do get on the US dollar, I think it'll go right back down, and the markets will go right back up. Long-term NIO is going way up. This is look at the weekly time frame on NIO. This is your pull. You're in the pullback phase. It's coming down. It's curling down. It's finally giving you that pullback phase. All right, and it barely gave 0.23. It gave like almost no pullback, like almost nothing. If you look at this whole move, how much has it pulled back? It's pulled back practically nothing. On that log scale, on the Fibonacci log scale, how much has it given you pullback? Nothing. The 0.2386. So if it comes lower, just know, like, no one would look at this and call it a bear market and be like, oh my God, it's 572, it's dead. No, that's a 0.382. That's like healthy. Even 0.5, that's healthy. Those are healthy corrections. I'm wrapping my video. I'm pretty much summing up my video here, and I want to just bring one last point here because I think this is probably the key point that I would bring here, and it's the dates. It's the timing. I think the timing is more valuable than price targets. I feel like because it can really help psychologically when you know when something is going to top out, when something's going to bottom out, and when you got like this rally here that lasted 86 days. I keep coming back to this Tuesday, December 30th, potentially, the bottom might come in slightly before then and we form and accumulate. Maybe it'll come the week before that. And the midday, which is the 30 bars in, which was Friday the 14th. And how that looks like is if I were doing it smooth. You guys see how that works? I'm just trying to paint that picture. Okay. And you zoom out, that's not anything. And the reason I'm taking extra time to say this is there's probably some people who are watching my video right now that are rolling their eyes. Seriously, Laser, you're going to call for we're never going to, and come on. I told you, this is my thesis. This is how I believe. I could be wrong. I'm sorry. Yes, record delivery numbers. Yes, fundamentals are improving. Yes, beautiful things come in the pipeline. Yes, everything's good. But you're telling me after all of that, every single one of these Chinese stocks bounced to the golden pocket that same week? There's a level of this that is outside the control and influence of NIO. And it has to do with the global markets. It has to do with the Hang Seng Index. It has to do with the DXY. We talked about this over and over again. And there's some major correlations there. So I do believe that we do want to, approach cautiously, even though short term looks good, which supports, we could see higher still. And I never showed this thing, and I want to wrap up the video. This video is getting too long here, and I really want to get this out to you guys. I'll use the 4-hour time frame. We'll use. I think I can use a 24-hour time frame to make my point here. Am I on it? No, I'm on log. Even on this regular scale, notice how it's intentionally dancing right around that. Do you see that? So I think I can kind of claw its way down here. And for those that's watched my old videos, that's the theory of the two trend lines. That's your first trend line breaking. Once this one goes, you'll get your bigger move down. And that's it. If you guys enjoyed my video, please don't forget to, smash the thumbs up button. If you're brand new here, don't forget to subscribe to my YouTube channel. If you have any questions, leave it in the comment sections below. If you don't have any questions and you just want to say hi or even just say anything, feel free to that's what the comment sections are for. You can also reply to anyone who also replies in my comment section. I appreciate all of you guys. It's Sunday. Hope you guys have a wonderful Sunday, a wonderful rest of your week. Don't forget to go outside, go for your walks, get your fresh air, get your sunlight. Don't let the stock market and the price stress you out. If you want to be in this for the long term, long game, you can't get stressed out over the day-to-day price action. You got to let it go. Got to let it go, and you got to just have that zenness inside you. Okay, guys. NIO fam, you guys take care. Have a wonderful weekend, and cheers.